Welcome to week 2 of Sally's dog walking business. Sally is pretty excited because week 1 went so well. She made some money and ready to dive into week 2. So week 2 is going to be some reasonably simple transactions, and we're going to start to add to the complexity a bit in weeks 3 through 5. But the first one, let's kick off with the first transaction. If you've got your workbook there, you can see the first transaction is going to be a repeat of the first customer at $25 a week, and they're going to pay cash. So on the screen here is our starting balance sheet of how it ended up at the end of week 1. So now we need to make an adjustment for this transaction number 6. First customer repeats at $25 a week, and they're paying in cash. So now your turn to have a go at entering the transaction. Press pause, and we'll come back and you can see how the transaction was actually done. Okay, so let's take a look. So $25 a week, paid cash. So there's a bit of a clue for you. It is a cash payment, so our cash goes up by $25. So it's going to be $190. And then so now our total assets is $450, and our equity plus liabilities is only $425. So we know something on this side needs to go up by $25. And as you may have guessed, it is the net income, because they've made Sally's made $25 this week. So that is transaction number 6. So now we've got a balance sheet of $450 in the assets, $450 in the equity and liability. And we know it's in balance because the formula for a balance sheet is assets equals equity plus liability. Let's take a look at transaction number 7. Okay, we've got a second customer, and this customer wants their one dog walked for 1 hour per day for 7 days a week. 7 days in the week, so every day of the week. And our rate, as we've discussed, is $10 per hour. So this is going to equal $70 per week. And this customer is going to pay in cash. So go ahead and enter this transaction. Okay, let's take a look. So very similar to the last one. This is purely an entry on the cash side here. So cash is going to go up by $70. So $260 there, and our net income also goes up by $70. So that becomes $95. And we can see here again, assets is $520, equity and liabilities is also $520. So we are once again in balance, and that concludes transaction number 7. Okay, another customer. Okay, we're getting some momentum here. This customer has 2 dogs, and they each want them walked for 1 hour per day, just 5 days a week. Now, we've got a bit of a deal for 2 dogs because it doesn't take twice as long. So we're going to charge $15 an hour to walk 2 dogs. So $15 an hour times 5 for 5 days per week is $75. So go ahead and enter this transaction. Okay, so just like the other 2, pretty straightforward stuff now for you. So the cash goes up by $75. Now we're going to have $335 in cash, and once again our net income goes up. So it's now going to be $170 in net income. Are we in balance? Yes. Total assets are $595. Equity and liabilities, it's also $595. We are in balance. Okay, so transaction number 9. Mum's been gracious in lending us the $300 to get our business started, and she wants some interest on her $300. So after a brief discussion, we agree, fair enough, we'll pay you $1 a week on your loan there, Mum. So we're going to pay that in cash. So go ahead and have a go at entering this transaction. Pause your video now. Okay, so what happened here? So interest payable to Mum, $1. Now that is going to be paid in cash. So our cash goes down by $1 to $334. And because we've incurred $1 in expense, our net income also goes down by $1. So it's going to be $1.69. So now if we look at our assets and equities and liability, once again, imbalance. Now let's take a look at all the transactions we've had so far in terms of the income statement or profit and loss statement. So we've had 3 customers. We've had a $25 a week customer, a $70 a week customer, and a $75 a week customer for a total sales of $170. And our only expense so far is $1 in interest. So have a go now at entering or filling out the details on the income statement. See if you can work this one out. Pause your video now. Okay, so pretty straightforward. This one, sales 170, so we put 170 up here. And our interest expense of $1 goes here. So our total expenses is just $1. And then our net income is the difference between sales and expenses. So 170 minus 1 equals 169 net income. And if we go back to our balance sheet here, we should see that net income is also 169 equals the net income on the income statement. Let's take a look at transaction number 10. We're going to do this one once again on the income statement. Now we're going to hire some help. We're starting to get busy and we're going to hire our sister to give us a hand to walk these dogs. So we're going to agree to pay her $10 an hour. I'm going to hire her for 10 hours per week equals $100. So have a go now at entering this expense on the income statement. And pause your video. Okay, so you can see we've got the labor line here, and we know the labor is $100 a week, so we just enter 100 in the labor costs. So our total expense goes up to now $101 when we add labor and interest together. And again, net income is sales minus expenses equals $69. So let's take a look at how that gets reflected on the balance sheet. Okay, so our net income was still 169 from our previous transaction of paying mum the interest. So now we've got to make an adjustment on both the left hand and the right hand side of the balance sheet to account for hiring the help. So go ahead and do that one now. Pause the video. Okay, so just the opposite of entering the income, entering expenses means that we paid cash for our help, so our cash goes down by $100, so that goes down to $234. And likewise, our net income goes down by $100, so that goes down to $69. So now, assets, equity and liability all in balance, $494, $494, so we're there. Okay, to wrap up for week 2, before we roll up our earnings, we'll take a look at our statement of cash flows. So statement of cash flows, to remind you on this one, we've got 3 types of cash flow: operating cash flow, investing cash flow, and financing cash flow. And what they mean is that operating cash flow is money that comes in and goes out, so physical cash that comes in and goes out from things relating to operating the business, like making sales and paying expenses. You've got investing cash flow, which is buying and selling of assets. Think of assets as physical goods, like physical goods that are used in the operation of the business. You've got financing cash flow, which is the borrowing and paying back of money. So these 3 types of cash flow, we add them up at the end of the statement to get a net change in cash flow, and then the last part of a cash statement shows how much money we had at the beginning of the period and how much money we had at the end of the period. So this is just cash, how much cash we had at the beginning and cash we had at the end. So a couple of ways we can check on this to see if we're going to work it out correctly. We take a look at, if we look at our balance sheet at the end of the last period, which is right here, we can see that our cash was $165. That's how much we had at the end of the last period. And if we look at our statement of cash flows, it says cash at beginning period is $165. So now if we look at our balance sheet for the end of week 2, we can see our cash is $234. So coming back to here, we know that cash at the end of the period, this one has to say $234 by the time we finish entering all the stuff in. That's our check and balance. So let's take a look, starting with the net income. So net income, we can go back and have a look at our income statement, our balance sheet, and we know net income was $69. So let's enter that one in, 69. Purchase of assets, we didn't buy any assets in week 2. No, we bought some leashes in week 1 and a pooper scooper in week 1. We didn't buy anything in week 2, so nothing there. We didn't sell anything, so nothing in there. And we didn't borrow any money. We didn't pay back any money. We didn't distribute any money. And we didn't invest any more money, so nothing goes in any of the financing cash flows. So it's only the operating cash flow that has an entry. So therefore, our net change in cash is $69 for the positive. So cash went up by $69. So then, like we said, down here, our cash at the beginning of the period was $165, and cash at the end of the period was $234. Check that against our balance sheet. Cash at the end of the period was $234, so we know that's right. So let's move on now to the rolling up the earnings, and I'll let you have a go at this one. So go ahead and pause your video and roll up the earnings on the balance sheet ready for week 3. Okay, so if you remembered, all we're doing here in the rolling up is we're taking our net income number, adding it to our retained earnings, bringing net income back to 0. So net income, we're going to make 0 and add 69 onto the 25, which is 94. And again, we can see that we're in balance because we're 494 here and we're 494 here. So that's rolled up the earnings for week 2, and that's the balance sheet at the end of week 2, ready to kick into week 3.